Charlie Munger is far lesser known than his business partner Warren Buffett, but his impact on Berkshire Hathaway and the world of investing was immense. Despite never seeking the limelight, Munger's influence is widespread, and his way of thinking has helped shape how billions of dollars have been allocated. His investing acumen and keen analytical mind are the stuff of legend on the raging Wall Street. But how did an average middle-class boy from Omaha, Nebraska, rise to such investing heights? What lessons can ordinary investors, just like us, learn from Charlie Munger's remarkable success story? Welcome back to Corporate Catalysts, where we take a closer look at the world's most captivating brands, businesses, and icons. Join us as we explore the life and legacy of the amazing Charlie Munger and borrow some of his life principles to apply to our own. Born in 1924, Charlie Munger grew up in a modest home in Omaha. His father was a lawyer, and like many families during the Great Depression, times were tough. Money was scarce, and opportunities were few. But even at a young age, Charlie showed an inquisitive mind, soaking up knowledge from reading whatever books he could get his hands on. While other kids his age were out playing sports, Charlie spent most of his free time expanding his mind. As a young teenager, he worked at Buffett & Son, a grocery store that was owned by Warren Buffett's grandfather. This would be his first connection, maybe just by chance, to the magic that would happen a few years later. However, young Munger still had a lot of work ahead of him. Charlie did really well in school right from the start, and was always at the top of his classes in subjects like science and history. Teachers saw how smart he was and how hard he worked. That's how he ended up going to the University of Michigan to study math. Here's a fun fact. After starting at Michigan, Munger never went back to Omaha except to visit. Actually, in early 1943, just a few days after his 19th birthday, he left college to join the United States Army Air Corps, where he became a second lieutenant. He pursued studies in meteorology at Caltech in Pasadena, California, a city he eventually called home. But he didn't stop there. He took advantage of the GI Bill to complete various advanced courses at different universities. He even entered Harvard Law School without a bachelor's degree, and graduated magna cum laude with a JD in 1948. It was there, in college and the Army, that he developed an important skill, playing cards. No, I'm not saying he became addicted to gambling. What he actually learned, in his own words, was to fold early when the odds were against him, and when he had a strong hand, to bet big, because those opportunities don't come along every time. Opportunities arise, but they're not frequent, so make the most of them when they do. Bet you hadn't seen it that way, huh? After serving in the military during World War II, Munger decided that he wanted to live in California. There, he began his career as a lawyer at a small firm. Although law kept him busy, his true passion lay in investments. Over time, he started managing investment portfolios for friends and family. Munger proved to be extremely skilled in the art of managing money intelligently. He also got into real estate investing. One of his first projects involved building apartments in Pasadena with his friend Otis Booth. Their success led to more projects across California, like Alhambra. Munger kept reinvesting his profits into bigger ventures, achieving a profit margin of 400%. By 1964, he had accumulated over $1.4 million thanks to real estate projects. However, that wasn't Charlie's long-term goal. He wanted to dive fully into investments, especially after meeting someone special who convinced him, Warren Buffett. Now let's talk about the friendship that changed the investment world. It was in 1960 that Warren Buffett, the great investor, persuaded Munger to leave the legal field and focus on finance. This pivotal conversation happened thanks to a mutual friend who invited them to dinner in Omaha, their hometown, thinking they'd get along well. And as it turned out, they hit it off famously. Charlie Munger and Warren Buffett stayed in touch, sharing investment ideas. And years later, Charlie would create his own investment firm with his friend Jack Wheeler, named Wheeler, Munger & Company. This allowed him to operate on the Pacific Coast Stock Exchange, generating compounded annual profits of 19.8% during that period, until the closure of his company in 1976. When they first met, Warren was 29 years old and Charlie was 35, and both ended up being a huge influence on each other's thinking and investing styles. Thanks to this, Munger incorporated principles from Benjamin Graham's investment theory and developed his own philosophy based on investor psychology. His ability to synthesize knowledge from various areas made him an exceptionally insightful thinker. Even Warren's investment vehicle at the time, Buffett Partnership, used Charlie's law firm for their deals, which helped Charlie attract even more clients. Their partnership solidified in 1975, and together they built an empire based on the concept of value investing. In simple terms, it meant buying shares of businesses they understood, with reliable cash flows and strong balance sheets, offering long-term value. Eventually, Charlie Munger became Warren Buffett's top associate and served as vice chairman of Berkshire Hathaway from 1978 until his passing. Berkshire Hathaway isn't a regular company. It's a holding or investment firm whose main goal is to own and manage stakes in other businesses, but it had modest beginnings. In fact, initially, Berkshire Hathaway was a textile company founded in 1839. In 1962, Buffett started buying shares of the struggling company. In just a few years, he became the majority owner and decided to expand into the insurance industry. By 1985, Berkshire had completely left the textile business, transforming over time into the massive conglomerate it is today. With Warren Buffett and Charlie Munger at the helm, it has become a company that is worth $882 billion at the time of this video. While Buffett took center stage as CEO of Berkshire, Munger preferred working away from the spotlight. He became vice chairman, but was quite content to let Warren do all the public speaking and interviews. Behind the scenes, however, Charlie's influence on Berkshire's success cannot be overstated. It was his analytical thinking and insistence on rational decisions that helped shape Berkshire into the Fortune 500 company it is today. In board meetings and private discussions, Munger was the yin to Buffett's yang. Where Buffett saw opportunities, Munger focused on risks and downsides. Their contrasting yet complementary styles created the perfect partnership. Together, they developed a culture of prudent investment at Berkshire that continues to this day. From acquisitions like Apple, Bank of America, American Express, Coca-Cola, Chevron, Occidental Petroleum, Kraft Heinz, Visa, MasterCard, and Amazon, Charlie Munger left his fingerprints all over Berkshire's playbook. Perhaps the most important aspect of Munger's involvement is that he notably influenced Buffett when he persuaded him to find interesting companies at good prices. In other words, Munger advocates finding companies that can endure and offer substantial growth prospects. On the other hand, Munger has also been highly critical of diversification strategies. Munger believes that if there is too much diversification in an investment portfolio, profitability may suffer. Hence, Wesco Financial Corporation, a financial company he chaired, had an investment portfolio with shares of only 4 companies. One thing that is undoubtedly true is that, without Munger, Warren Buffett wouldn't have reached such heights. At 99 years old, Charlie Munger passed away as vice chairman of Berkshire Hathaway and one of its largest shareholders, with shares valued at around $2.7 billion. And although this figure may not have made him the richest person in history, his financial success is undeniable. But perhaps his greatest gift has been imparting invaluable wisdom to help others achieve long-term success. So what can we learn from him? Well, here are 5 key lessons that investors can borrow from Charlie Munger. 1. The big money is not in the buying and selling, but in the waiting. See, high returns don't actually require high effort. Charlie Munger was a strong proponent of the power of long-term investing and compound returns. He understood that allowing your investments to grow over extended periods can lead to astronomical results through the magic of compounding. Rather than chasing short-term wins, Munger advocated for having the discipline to remain invested and allow your money to continuously earn returns on top of previous returns. He also believed that patience was a rare virtue among investors. Those who are patient have stood out and made it to the list of the world's richest because they tend to be patient and invest for the very long term. 2. Multidisciplinary thinking as a competitive advantage. Munger strongly believed in the power of multidisciplinary thinking. He thought that to make smart decisions in business and investments, you should have a good understanding of various subjects. This broad mindset helped Munger see connections that others missed and gave him a competitive edge. He showed that having diverse knowledge is just as valuable as financial wealth. 3. Avoiding stupidity was a fundamental principle in Munger's philosophy. By emphasizing prudence and careful risk analysis, Munger taught that sometimes it's as important to avoid bad decisions as it is to make good ones. 4. Simplicity can make a difference in performance. If something is too hard, we move on to something else. What could be simpler than that? Charlie once said. So, focus on simplicity, reduce risk, and invest in well-known and resilient assets. To move in this direction, it's important to know how to invest and why. Being aware of your life goals, what you want to achieve, and your financial targets helps you evaluate your risk tolerance and investment timeline for each investment. 5. All intelligent investing is value investing, requiring more that you are paying for. You must value the business in order to value the stock. With this quote, Munger teaches us that when deciding to buy a stock, Investors shouldn't just focus on the price. They should look at the competitive advantage, brand strength, and growth potential of the business. It's not straightforward math, but it's not too hard either. One easy way is to research companies and sectors, their past performance and future expectations. So, there you have it. The life story of one of the best investors in history. Just a small sample of what we can learn from his successes for our own journey. Whether you agreed or disagreed with some of his decisions, there's no doubt that his impact on the world of finance and investing will be remembered for generations to come.